Hi folks, Scott here, and this is the wrap for Wednesday, October 30th. So this is a view of the past 3 or 4 months, 5 months of gaps in the S&P 500 E-mini futures, and you see today's red candlestick here. In fact, this is technically called a bullish correction, bearish engulfing pattern. A red candlestick where the open and close engulf a green candlestick. So it's often perceived as a bearish pattern among candlestick followers. It doesn't occur nearly as frequently as a lot of people think it may, at least not as I've described it here, with the open being above the prior day's close and the close below the open, just as strictly as it is shown right here. But I want to show you the results of fading gaps following this particular pattern. Using an end-of-day stop, not something I recommend, but a good place to start your analysis, and specifically during a bullish market when above the 10-day moving average and above a 200-day moving average. So bearish engulfing pattern above the 10 and 200, fading the gap. I'll use Gap Trader, my back testing tool. And there you go. Maybe a slight bias for gapping up the subsequent days, what this shows. Clearly a short bias though, right? Using an end of the day stop, 13 and 15 up gaps have filled, making a lot more money than it lost. And look, the average winner wasn't that big in a relative sense compared to the total profit. So not dependent upon one big trade here. Down gaps, small sample size, really hard to tell. In fact, if you get rid of this one loss, it's actually been profitable. So doesn't tell us much. Maybe odds favor gapping up, and a short appears to be a better trade. Now, as always, I'll rerun these numbers for our members in the morning using our MTG stop parameters, which are basically volatility adjusted stops, to see if an up gap is indeed tradable. All right, let's talk about today, Fed Day. Let me show you what the worksheet showed going into today. The worksheet's my worksheet for sizing up big picture of what's in play on a given day. I take an average of the 8 individual gap guides, as this says here, and they're shown right here. Odds for gap fill were very similar to yesterday, above the high, very strong numbers, or between the high and the close, which really wasn't much of a zone there, opening area. But this was a good setup. We opened above the highs. Historically, it doesn't normally look this good. It's generated over 50% more profits than losses. Solid setup. Up gaps on Fed Day during similar market conditions, good. Now, one thing to consider, this does not assume you close the trade before Fed announcements. So I probably need to rerun these numbers and assume that, because I personally would not hold through Fed announcement. Up gap after an unfilled up gap, also very positive numbers. Again, did not assume you closed out ahead of Fed announcement. So key thing is you have to discount those numbers a little bit. In fact, these numbers are so good, I don't really need to look at the individual guides. I did, and I think it was 5 of the 8 or 6 of the 8 met my criteria for fading. The others were neutral. So nothing to worry about there, nothing negative. Pre-market comments. Should per last night's wrap, fading gaps on Fed Day following a 5-day high close when above the 200, and assuming you closed out at noon, has been attractive. There's sample size terribly small there. Bottom line, gap guides, I have an extra gap here, sorry about that. Gap guides are showing overall attractive odds for fading. Unique data, generally positive. Key concern, small gap size, potential mixed up in directions. We bounced a little bit into the open, so that was a non-issue. And I had a lot of specifics here. I don't always have this much specificity, but if I have time, I'll include it. And today I posted, if the ES opens up with at least 1.5 points of opportunity, so greater than 1769, that was basically to account for Fed Day volatility and potential risk, and make sure my stop was beyond the Globex highs sufficiently as a little added cushion. And this is pretty conservative, me adding this, but again, on the heels of a loss like yesterday. The market has spoken, and I've listened. Said I'd fade them in the half-size position. May use a slightly bigger stop. That was depending upon the size of the gap. I did end up with a 6-point stop because we opened right at the criteria 1769. And also said if it opened below it but then bounced before it filled, then I'd go short on delayed entry. Again, when you see this many scenarios I'm laying out, I'm trying to get short, okay? And I'm trying to do it in my core account. That's the best way to interpret, I guess. So, and I said I'd close my position earlier 159 prior to Fed announcement. So that's what I did. And let me show you Small gap up 69.25. I was filled short at 69.25 with no slippage. Dow gapped up quite a bit. Nasdaq even bigger gap it looks like, and Russell tiny gap went short. And I didn't say it there, but I posted in the trading room in the announcement tab. And right after I came into the room, saying I'd go for half at gap fill and half at extended target. Now, why would I go half for extended target today? Well, we were stretched even more than we were yesterday, and I was very interested in the extended target yesterday too. But look at the worksheet. The real answer is this. The odds, on average, across all 8 indices favor the extended target. I'm looking for the extended target numbers here to be greater than 80%. This is simply, these are just simple mathematical ratios, taking the extended target numbers shown here, dividing them by the gap fill number shown there. As long as both numbers are greater than 80%, I'm almost always going for a quarter minimum, if not a half, of the position for extended target. So that's what I did, and I got out for plus 1.5 points at 67.75. Held the other half for plus 3 points at 66.25, which was, you could round the extended target one way or the other. Extended target number shown on the gap guides. Now, the one thing I'm proud that I did was that after the gap fill was hit, I tightened my stop to 1 tick above entry. I do that routinely. I won't go to right to the open to avoid the scenario that happened today, which is price went straight to the open after it got gap filled, bounced. We'll often do those small gaps, tested the open. Look at the high there, 69.25. My stop was 69.50. I tightened it 1 tick above that, posted well in advance in the trading room for everyone. And honestly, I got a little bit lucky today. It doesn't always hold like a brick wall, but you got to draw the line somewhere. It was a good call today. Rolled over and I got plus 3 in the second half, an average 2.25 points. Nice, fast, easy win on Fed Day. The first hour of 15-minute range trades did not show anything that was quite strong enough for me to trade today, so I left it alone. And didn't see anything that looked very attractive to me down here after Fed Day announcement and the close, so I just left everything alone, and that was my day. So we'll see what tomorrow brings us, but overall, great day. Made a little money and didn't have to work too hard, so hopefully tomorrow will be the same. We'll see. Have a good one. Take care.